Good evening. Nifty fell in every session last week, even as domestic institutions bought more cash equities than foreign institutions sold. Why did that buying soften the decline without stopping it? Nifty lost 2.3% over 5 consecutive lower closes. The sequence matters. Monday's weakness was concentrated in large private banks. Lending margins narrowed at Axis Bank and Kotak Mahindra Bank and improved at ICICI Bank. The price response was consistent with investors looking beyond headline profit growth to core earnings quality. Tuesday still looked healthier beneath the index. Nifty slipped, but 33 of its 50 stocks rose and volatility declined. Wednesday broke that resilience. Nifty fell 0.8%. 40 of its 50 stocks declined. Banks, information technology, mid-caps and small caps all fell more than 1%, and volatility rose. The weakness had become broad. Thursday nearly repaired its opening gap, then reversed. On Friday, after Brent crude crossed $100, Nifty opened almost 0.9% lower and recovered 161 points from its low. But the gap never filled, only 14 stocks rose, and earlier support was not regained. That was absorption, not repair. From a technical analysis point of view, the 23,840 to 23,920 support zone weakened on Thursday and remained unreclaimed. Across the week, foreign institutions sold about 7,200 crore rupees of cash equities, while domestic institutions bought about 8,600 crore rupees. Yet Nifty still fell. Domestic buying was a cushion, not a floor. Oil was the strongest common macro headwind. United States-Iran fighting and shipping attacks pushed Brent above $100 before it eased. Expensive imported energy can pressure India's trade balance, rupee, inflation, and company margins. India also underperformed several global peers, pointing to domestic pressure as well. The two expiries were useful but limited scorecards. Tuesday's assumption-based public open interest estimate began near its transition point, so conviction was low. By noon, its largest nearby modeled concentrations had moved to 24,150 and 24,200. And Nifty later settled inside that area. On Thursday, Sensex opened below the modeled 76,700 concentration of put options, briefly recovered it, then failed. These maps offered reference areas, not actual dealer positions or primary explanations. Earnings were mixed. Infosys reported revenue growth and a resilient margin, but narrowed the upper end of annual growth guidance. After Friday's close, Bank of Baroda reported a sharp profit decline, mainly from a one-time settlement charge, while net interest income grew. Monday's response will show whether investors look past the exceptional charge to the underlying banking trend. Over the weekend, airstrikes paused and Oman-mediated diplomacy progressed, but the Strait of Hormuz remained uncertain. This week brings Nifty expiry and Larsen & Toubro's results on Tuesday, the Federal Reserve meeting on Tuesday and Wednesday, and Sensex expiry on Thursday. United States rate expectations matter because they can move the dollar, bond yields, and foreign risk appetite. The framework is simple. A cushion is not a floor. Durable repair requires broader participation, steadier banks, and softer volatility together. This is market analysis and education, not investment advice or a recommendation to buy, sell, or hold any security.